Okay, so in the previous class, we discussed about, I believe, RSI or MACD. One second, let me check. Where it is, this one. So yeah, we discussed about MACD actually in the previous class. And I told you, usually when we, see, I hope you remember the previous class, of course. But I mentioned, usually when we get a cross, a bullish cross in the positive area, on a bullish area, that means we are bullish, correct? Okay, at least for the short term. Now see, it also depends on the time interval. So if it's a 4-hour chart, that means we can be bullish for, let's say, next 2-3 days. If it's on 15-minute chart, then we can be bullish for maybe 1 hour. If it's on a 1-day chart, that means we can be bullish for at least a week or 2 weeks. If it's on a 1-week chart, that means we can be bullish for a month. Okay, but it depends. Okay, it depends on the time interval. So this is what we discussed in the previous class. And of course, if we get the same kind of in the negative cross also in the bearish area, then of course we can be bearish. Now let me show you one example of this right now. I am already in a trade. It's a very small trade, of course, just a couple of $100. Okay, but I just wanted to show you the example which I'm trying to tell you in the previous class. See this cross. See, it's close to zero. It's on a 15-minute chart. Remember, it's a day trading. This is not swing trading. Yeah, MACD. So this is day trading. Okay. Usually I don't suggest to do day trade, but this is what I am explaining right now because already I'm in a trade. So because we got a bullish sign, right, on MACD, plus if you see this part, we are around at a support level. See, on a support level, a bullish indication. What happened next? You can clearly see this. That's a very good moment. Okay, after breaking this particular resistance part, this is day trading. Remember, guys, right now I'm doing day trading, so that's why I'm explaining. This is the current trade which I am on right now. So you see the market moved up by 1%. 1%, if you take like 5 times leverage on a 1% trade, it becomes 5% automatically. Okay, so that's a good trade. Okay, but you can clearly see for at least 1, 2, 3, 4, and we still have 7 minutes left. So let's say at least for 1 hour, the market is bullish. 1 hour is a good enough time to book your profit. Okay. Now let me tell you where I took the trade. So as you know, I don't trade Bitcoin. I usually trade other coins. So my trade is going on this particular part. Okay. It's not moving that much powerful with Bitcoin right now, but I'm already in a profit of around. It's around 4 or 5% right now for me. Okay. I'm hoping to make at least $200-300, something like this. So my goal is to book somewhere in this range, actually, somewhere in this range. That's it. If it touches that range, I will get out from the market. Okay, based on the same concept. Okay, that there's a see support zone. You might not look great, but you see this is support zone. Okay. A support zone, first thing. And if I go on a 30-minute chart, of course, you can see the trend line is broken. See this trend line? Not this one, but see this trend line. See? Proper trend line. Okay, we got support from the trend line again, and then the market moved up. And if I go on a 15-minute chart, we got a bullish indication. Now, that does not mean the market can't go down. Of course, the market can go down easily. Okay, and because of that, you have to place a very tight stop loss in this kind of cases generally. This is as I said, like this is a day trade. So my stop loss is somewhere right around here. That's it. If it touches, I will get out. No worries. Okay, I might lose just $10 or $15, which is okay because I am hoping to make at least 200 or 300 on this one. So that's totally okay. Okay. But yeah, that is related to MACD actually, and you can clearly see this one. As I mentioned, bullish sign. Okay, bullish indication of MACD in a bullish zone. That means the market will move up, correct? And you can clearly see We got a bullish sign on MACD on a 1 hour chart. That's a very good bullish sign, right? So from right around here, I did not see it actually. It happened in the morning for me. Okay, and you can clearly see the percentage. The percentage is around 8%. That's a very good percent, right? I mean, within a day, if you can make 8%, that's a good percentage. Okay, and right now, one more thing you have to understand: the link is actually breaking this particular resistance level. And of course, I can create one more resistance level, which is going to be the actual higher one, which is actually this one. So I think the BTC, I mean, the link might touch this level and then it will come back down. Okay, and BTC is also moving. And one thing you can see on BTC is we got a support from again 20-day moving average. Again, we got a support from 20-day moving average. You can clearly see the settings. It's a 20-day moving average. Okay. So again, we got a support. What happened here is basically one thing. Those people who took long position right here, they got liquidated because their stop loss got hit. Okay. Then those people who took short position and this right here, they also got liquidated again. And now the market is getting support from a 20-week moving average. Okay, so to be very honest, I don't know what can happen, but I believe in the next 2-3 months, the market must go down. Okay, this is what I think. But yeah, of course, we have to be ready for everything. But yeah, okay, so this on a 1 hour chart, we can see a negative or a bearish candle. Let's see what can happen. Maybe I will lose $10-15, of course, or maybe not. Who knows? But yeah, let's continue. In the previous class, we discussed about MACD, and in this class also, I gave you an example of it. Okay, how we can use it in a bullish area. If you get a bullish sign, great. In a bear, I mean, of course, a bullish sign in a negative area, no trade. Okay, and of course, a bearish sign on a bearish area, great. Nothing to be worried about. So this I showed you. Okay. Let's just check what Bitcoin is trying to do. So Bitcoin looks actually good right now. Nothing to be worried about. Okay, so in today's class, we will talk about volume. How volume is useful. Before we even talk about volume, let me be very clear. See, volume is useful in forex market, in stock market, any kind of market which is centralized. Okay, but in crypto, it does not. I mean, it's not that much useful, to be honest. Okay, why? Because crypto market is not that much centralized, right? It's the overall plan for crypto is to become a decentralized market, correct? So that's why it's not that much useful. Okay. So, but still we will talk about it. It gets useful sometimes. You must know about it actually. That's why. So let me just put volume on the screen. So what you have to do, indicators. From indicators, you must go to technicals. From technicals, you can just write volume and you will get a volume, right? Okay, nothing crazy, right? Okay, now let me show you some theoretical part first. And also I will send you 2 pages. This is small 2 pages actually, not that much. Okay. 1 second. Okay. So few things which we need to understand about volume. The first thing is very basic. If the market is moving up, okay, for example, if the market is moving in the upper direction, something like this, plus the volume, if the volume is also increasing slowly, that means the trend is getting verified. The market is moving up, plus more and more people are entering into the market. That's a volume. Okay. A very simple thing. If the market is moving in the upper direction, also the volume is also increasing. The volume is also increasing. That means it's a confirmation for the trend. Okay. Now the opposite of it, for example, let's say, let me ask you this question. Let's say, for example, if the price is increasing, but the volume is at the same level. Okay, it's something like this, or maybe even decreasing, let's say. Then what we can expect from the market? Okay, it's a question for you guys. Tell me. In the first case, we can clearly see the market is moving up, plus the volume is also increasing. It's a trend confirmation. Okay, that means the market is moving up, and plus more and more number of players are coming into the market. But what if the opposite happens? Okay, the market continues to move up, but the volume is at the same level. Okay, or the volume is decreasing, for example. What do you think? Please do give me answer. It's a very simple thing. See, basically, it's a negative sign. Why? Because it's kind of a manipulation, to be honest. Because someone is trying to move the market in the upward direction. Why? Because they want you to get trapped in the market. Okay. Plus, there is no other buyers coming in. There's only single player or a couple of players who is playing the game. Okay, but not a great number of buyers or sellers are coming into the market. Okay. So this is kind of a trap. This is kind of a trap, you can say. So if you want to confirm the trend, then go for something like this. But as I said, yeah, price drop. Of course, the price can drop. I mean, of course, it's kind of a trap. So you will see the market and the market is moving in the upper direction. You will buy, and then the market will fall down. Okay, so it's kind of a trap, you can say. Okay. Now, for example, if the price is falling, these are like simple examples. Okay, nothing to be worried about. For example, if the price is falling and slowly the volume is rising, then what you can expect? The price is falling, okay, and the volume is slowly rising. Okay, the volume starts to rise. Then what you can expect? Think about it. Price appreciation. Again. Think about it. I mean, of course, if your answer is price appreciation, and if I'm telling you to think about it, that means if the opposite is going to happen. That's a negative sign actually. Okay, negative sign, that means the market is going to go down, because as the market is going down and the volume is increasing, that means more and more people are trying to sell. Actually, it's also trend confirmation. Okay, this is also trend confirmation, right? The market is moving down, the volume is increasing. That's a trend confirmation. The market is moving up, the volume is increasing. That is also a trend confirmation. So both things are trend confirmation. Okay. Sometimes in crypto you will need it, but volume is not that much important in the case of crypto market, but it is important for forex or for stock. I mean, if someone wants to play in the stock market or in the forex market, then of course this is a good one. Okay. Now, let me just clear this frame because this is the last one. For example, let's say the price is falling. Okay, it has fallen down till here. The volume has increased now, and slowly what happens? The volume start decreasing. Okay, now this is the volume, right? This is the condition. The price is falling. Of course, the price fall down first. The volume increase. That means we already understand the more number of sellers are coming into the market. Now the price is still going down, but you can clearly see the volume is going down also. Now what you can figure out from this? Now what you can think about this part? Think about it. Anyone? Selling pressure is decreasing. Oh, that's correct actually. Selling pressure is actually decreasing. Absolutely correct. Okay, and if you say the selling pressure is decreasing, that automatically means the buyers are entering into the market. Correct? The same thing. I mean, just different language, same stuff. Okay. So of course, yes, correct. Selling pressure is decreasing. It automatically means the reversal is going to come. Okay. If you remember the base breaking strategy, in base breaking strategy, you can use this kind of stuff to figure out a potential area for a reversal. You can use this kind of stuff for that. Just give me 1 second, guys. Okay. Yeah. So right around here, of course, if the market is moving down, if and the volume is increasing, then at the end, generally at the end, the volume will start decreasing, and at that point, we can say the reversal is going to come. Okay, so then the reversal might is starting coming into the market. Okay, this is generally a positive sign for someone who is going to take a long position, only and only a long position. Okay, this is useful for those kind of people. And now there's one more indicator which I want to discuss, which is basically Bollinger Bands. You might have heard about Bollinger Bands actually. Wait a minute, let me put it on the screen. Hmm. I can give you a few example of the trend confirmation. You can clearly see right around here. The market is moving up, plus the volume is increasing. Also, you need to understand volume is not that much useful in crypto, to be very honest. Okay, because this is not a centralized data. The volume is not a centralized data, right? On Binance, it can be different volume. On Bybit, it can be different. On Bittrex, it can be different. Okay, so this is not a centralized volume. Generally, in forex or in stock market, you will get a centralized volume properly. So in that way, it is very useful. Now you see this part. The market is increasing, but the volume is dead. Now, that's why, I mean, see, of course, it should be something like this actually. In a centralized market, it should look like this actually. But in a decentralized market, this is, I mean, of course, a bad indication. Okay. Now, I'm not going to say because of this, the market is going to go down because this data is invalid. That's why. If we can't use this particular data, the volume data on this particular part right now. Okay. Okay. So the next indicator is Bollinger Band. This one. I sometimes use it. Okay. Not that much. It provides us a range. It provides us a range in which the market can move. Okay. Now, Bollinger Band is useful to understand. I mean, see, if you are in doubt, let's say, just buy when the when the price is touching the Bollinger Band, something like this. See, in a very, very simple way. Okay. So let's say if you don't understand anything about the market and if you want to make just quick bucks, okay, what you can do is you can use Bollinger Band. If the market is going down, you can use the Bollinger Band. And you can also start doing dollar cost averaging, DCA, okay, which is also useful. There are many things regarding Bollinger Band. Few of the things is basically you can figure out a reversal or something like not a reversal, but something like a breakout. A breakout can be, of course, in both direction or in an upward direction or maybe in a downward direction. I have few things written about boiling and band. Let me find it for you guys. Also, I will take a picture of that particular page and I will send it to you so you can read about it. Hmm. Okay. Now you see, if the market is going to get a volatility, I mean, if the market is going to move up, for example, or down, the market will show you. I mean, of course, by using Bollinger Band. Now you see this part. Here the market is moving something like this, okay? And then the Bollinger Band, it start closing down. See? So it start contrasting, okay? They start contractions. And what happens here is basically now the market have to decide either it moves up or it goes down. In this case, the market moves up. Then again, what happens? You see, again the Bollinger Band starts contraction. And then this happens, right? Now again, the market has to choose a decision. Either it goes down or it goes up, but something has to come. Or you can say the volume will come. If you see this kind of condition in the Bollinger Band, then you understand the volume has to come. Okay. Now it can come in either direction. It can come in the upward direction or maybe the downward direction, but it has to come. Okay. Now you see this part. Again, if you don't know anything about the market, no support resistance, just buy. Buy. Correct? If the market goes down again, just buy again. Okay. The one thing is you can also refer to this for dollar cost averaging part. Okay. But let's say you bought and then now the market is touching the upper limit. Just sell. That's it. That's a Bollinger Band. That's why a Bollinger Band is useful. It provides you a certain, let's say, domain. In that domain, you can work. Okay. That is useful. Play with Bollinger Band. It is useful, more or less. Volume, you can try to play with it in the stock market. Okay. In that condition, you will understand in a better way. Okay. Now, let's talk about pattern trading. There is one more indicator called stochastic RSI. But stochastic RSI, it is in the course, but I have ignored it. Okay, we are not going to talk about it because that stochastic RSI is useful for day trading. It is not useful for swing trading, and that's why I added this Bollinger Band for you guys, because this Bollinger Band, it is useful for swing trading. Okay, play with Bollinger Band. Bollinger Band, it is based on volume itself. Okay, if the volume is increasing, there is more volatility in the market, the Bollinger Band will expand. If it contracts, of course, it can also contract something like this. Okay, and then you can expect a move coming into the market. Now the move can be in the upper direction or in the downward direction. Okay, but you can expect a move coming into the market. Okay, now let's talk about pattern trading. So pattern trading is my favorite. Okay, so very good case. And once you understand pattern trading, then that is the last thing that you need to understand everything about swing trading part. So in the half of this class, of course, and in the next class, we will only talk about pattern trading. And just to let you know, the trade which I took, my stop loss got triggered and I lost around $15, something like that. Just an update. The BTC is still moving. The BTC is still moving up. If you see on a 15-minute chart, it is still moving up. But the coin which I selected, that actually moved down. Okay. And because of that, I lost it. I mean, still the concept which we're working on was actually good. Okay. The strategy was actually correct. It's just that I have chosen the wrong coin, to be honest. If I have chosen the same coin, like something like Harmony or maybe LRC is also doing fine. It's just that the FET coin has moved down, and that's why my stop loss got triggered. Of course, the same logic if I apply on dot is working. It's just bad coin selection. Okay. Now let's talk about pattern trading. Pattern trading is the easiest. It's very easy to understand, and it is useful in every kind of market. In forex market, in the stock market, in crypto market, and if someone wants to play in a commodity market, let's say on oil prices or on gold, silver, uh, gold, silver, I mean, in any kind of market is useful. I'm trying to download image for you guys actually. Just give me a minute. Hmm. Whatever we have studied till now, as you know, it also comes from forex market, comes from the stock market, but we just make it a little bit twist and trick here and there and use it for crypto. Okay, but this is pattern trading, and this works for each and every kind of market. Some of the patterns are simple to understand, simple to figure out. Some of them are hard to figure out. And yeah, just one more thing. If you have any question, please drop it in the chat. I will take your questions from there at the end of the class. Okay. Now, in this one, the easiest one, let me show you the easiest one. See, the triangles are always the easiest one. So this one, this one, this one, and this one. Four of them easiest to understand. Then this is also a triangle, little bit different, but this is also a triangle. So this and this is also easy to understand. So these six are my favorites. Then I like this kind of patterns, which is what we call continuation patterns. This is basically bullish variant, rectangle, rectangle, flag, flag, pennant, pennant. Okay. So this six I also like. Then comes this two. It's basically double top, double bottom, triple bottom. And I did mention you about this part when I talked about RSI. Remember, I told you this is a double bottom, this is a falling wedge, this is a rising wedge. You can watch that video again. Okay, so I told you about these names like falling wedge, triple bottom, double bottom, right? Maybe I have told you about symmetrical triangle also. Okay, but this is what I like. Now, to be very honest, I have never used cup and handle. I have never, I mean, for me, maybe it's hard to figure out a cup and handle pattern, but I've never used it, to be honest. Okay, so of course we can talk about it. I can show you some examples of it from internet, but I've never used it, to be very honest. Okay, head and shoulder, I have used it. I do like head and shoulder patterns. Okay, they are reversal patterns, great to figure out. I have known few people who only do head and shoulder pattern, just head and shoulder pattern. Okay, I've known those. I mean, not personally, but through internet, I've known those people. Okay, but they love head and shoulder pattern. I don't know why. I do have taken few trades based on head and shoulder pattern. Great pattern to work with. It has an accuracy of almost 70-80%, something like that, which I have figured out. Okay, but yeah. So let's start with the symmetrical triangle. Okay, let's make it simple. Let's start with the symmetrical triangle. And in this class and in the next class also, we'll talk about this particular topic. Okay, and after that, our course will be completed. So now, this is, you can say trend lines basically, and the market is moving something like this. Okay, something like this. Now, don't worry about the points. Now, it can be 2 point also, it can be 3 point also. It's just that you have to understand to draw a line which creates a particular pattern. Okay, if it's a 3 point, great. 3 point is, of course, to draw any kind of trend line, you need minimum 3 points. Okay, let me just draw it for you so you don't get confused. Actually, let me just draw it for you. Okay, now it's good, I think. Okay, so this is our two lines. So this is a resistance trend line, correct? And this is a support trend line. Okay, very simple. Now, can anyone tell me, I mean, if you guys can use your mic, I believe. We are only 8 people here. So can anyone tell me what is happening in the market right now? As the market is moving like this, so what is happening in the market? You can use chat to answer. You can unmute yourself and also answer it. It's up to you. Okay. I just need to know when the market is moving something like this, what do you think what the market is trying to do? What the buyers are trying to do and what the sellers are trying to do? Anyone? Just answer me what the buyers are trying to do and what the sellers are trying to do. Anyone? The market is moving sideways. Okay, we can clearly see in the chart in this particular pattern. This is what we call symmetrical triangle. We have a resistance trend line. We have a support trend line. Negotiate a good price. Yes, actually, in a way, of course, they're trying to negotiate a good price, or they are just trying to overpower each other. Then what is the job of a seller? Sellers want the market to go down. They are selling. Yes, I mean, of course, the sellers are trying to sell. You can clearly see. So here, they're trying to create a lower high. See, lower high again and again. Okay, that is one thing we can figure out. So the sellers are trying to push the market in the downward direction by creating a lower high. On the other hand, what the buyers are trying to do, they're trying to do the opposite. So it's like they're trying to move the market in the upward direction by creating a higher low. So both that, I mean, it's like a tug of war, right? There are two teams and they're trying to push the market in their side. Okay, of course, as and Debug said, negotiate a good price. Yes, they're trying to negotiate a good price. They're trying to move the market in their direction. And at the end of the day, one has to win. Either the buyers will win or the sellers will win. Okay, one has to. So what will happen? It will, or you can also make it something like this. So on this kind of thing, if you put a Bollinger Band, then what you are seeing the consolidation, a contraction of Bollinger Band also. A contraction of Bollinger Band, and one thing has to do. One thing has to come, right? Either we will end up in, I mean, the market will move up or the market will move down. One thing has to do, right? So you can use Bollinger Band theory also here. But yeah, so in this case, for example, let's say the buyers win. Okay, let's say the buyers win in this case and the market moved up. Something like this. Now let's identify an entry and an exit point and a stop loss position. It's very simple. Okay. Crypto market is volatile. We all know that. Okay. Generally, in stock market or in forex market, technical analysis gets respected more as compared to crypto market. Okay. For the next 10 trades of until or unless you become comfortable with this kind of pattern trading, always wait for the retracement. Always wait for this kind of movement. Okay. The market will move up, it will break the resistance trend line. Then the resistance trend line will convert into a support trend line. Okay, and then the market will move up. Correct? This always happens in every market. What I'm trying to tell you is that in crypto market, sometimes the volatility is very high, and sometimes what can you see is you will see this kind of movement. There is a break of resistance line, and then there will be no retracement. There will be no retracement, and the market might move up. So this kind of thing can also happen. Okay, but as a beginner trader, all of you must wait for the retracement. You must wait for the retracement. Okay, see, now after the retracement, what you have to do is just once there is a retracement and the market takes a U-turn from there, the resistance line becomes a support line, then you will enter. Just like how we did in a case of channel, also we did in the case of support and resistance, right? Remember? Just like that. Below this retracement, you can put your stop loss. Okay. Right here, you can just enter. Now, how to figure out an exit point? That's a very big question. It's very simple. So what you have to do is you have to take the length from this point to this point. Something like this. L. This is the length. Okay. Then you have to take this length, copy it, and you have to paste it from this particular triangle, let's say. Okay. Just to be on the safe side, that's why we are using this particular point to put it. Let's say it's the same length. Capital L and capital L, it's the same length. Okay. Yeah. So now your exit point will be decided by this particular length. The length is completed right here. Just below it, you can exit. Okay. Looks very simple. Triangle pattern is one of the simplest pattern because anyone can figure out this particular pattern. Anyone, even a beginner trader, an intermediate trader, or maybe an advanced trader, they all can figure out this kind of particular pattern because it's very simple to see. Okay? Patterns has to be simple. Now patterns like head and shoulder or cup and handle, they are a little bit hard to figure out. Okay, and I mean, see, as I said, like cup and handle, I have never used it. Maybe because it might be hard for me to figure it out. Okay, maybe for someone it becomes very easy. But this kind of pattern, this particular triangle pattern, or symmetrical triangle, or ascending triangle, descending triangle, they are very easy to figure out in the market. Now let me just revise this part. So we have a resistance trend line, support trend line. The market is consolidating, then of course it has to break in one of the direction. So in this case, it broke in the upward direction. The resistance trend line, after the break, the resistance trend line becomes a support trend line, which we call as a retracement. So the retracement happens and the market starts moving up, right? Once the market takes a retracement and takes a U-turn, then we have to enter. Just below the retracement, you can put your stop loss. And to figure out an exit point, you have to take the length of this particular triangle, symmetrical triangle, and you have to put it on this side basically. Okay, you can put the bottom of the length just around the retracement point. Okay, and from that you can calculate the length. Okay, just before the length ends, just like how we exit before the resistance point, similarly, just before the length ends, we have to exit. Okay, and the difference is going to be a profit. Very simple. Now let me show you an example of it. Example of it will be easier to find out. I remember one example. Let me use that one for you guys. Can I use it on a 4-hour chart? Let's see if we can get that kind of data on a 4-hour chart. Yep, we can. Okay, you see this part? Now you will understand what is the theoretical knowledge and what is the practical knowledge. So this is the theoretical knowledge. Okay, that we all know. Now this becomes a practical one. Let me draw a trend line here. You can clearly see A, B, C, Okay, 3 points. Let me draw something like this. Okay, 1, 2, 3 ABC points. Okay, now that's a very good symmetrical triangle, correct? Okay. Remember this. See, the starting of this trend line and the starting of this trend line is different. But in theory, what we have understood that the starting of both the points are almost same. But here things got different. The starting is different. So how can you calculate the length? Okay. First and foremost, you can clearly see how the market broke this particular trend line, right? So resistance trend line, then comes back. This is what we call retracement. So the resistance becomes support and the market starts moving up. Great. Okay. So everything is good. You can just take a long position, put it right here, manage your stop loss, less than 5%, target to book your profit, something like this. Okay, so everything is good. Yeah. But how to figure out an exit point? Should you exit right here, right here, right here? Who knows? Okay, so let's try to find out an exit point. Now here I can draw two lengths. I can take this one from here to here, let's say, and I can extend this one also. So from here to here, or I can take this point. Actually, this will be like this. Or I can take this point and make it like this. Now, suppose this is a A length and this is a B length. Can you tell me which one I should choose? Which length I should choose to figure out my exit point? Okay. A length, which is on the left hand side, this one, or length B, which is on my right hand side. Tell me which one I should choose. Length A or length B? Length B. Okay, I got one answer, length B. Second answer is length A. Okay. Anyone? Any? Now, can you please give a reason behind your answer? Just few words. Why do you said A or why do you said B? Can you just give me a reason behind it? A is on the left and B is on the right hand side. Okay. Just a small, because this is important actually. I mean, this is important because if your concept is very clear about trading, okay, we are at the end of the course. So if your concept is very clear, you might give me that answer actually. Okay. B is because the leg starts there. Okay. The leg starts there. But the head starts from A, right? Why not A? Okay, let me tell you. Thanks for answering. Let me tell you. Remember the starting classes. As a trader, what we are trying to do? Whenever we are in doubt, what we try to do? We try to increase the probability of our success and we try to decrease the risk of our failure. What we do as a trader? Remember, we try to increase the probability, P increasing, R decreasing, decrease the risk, increase the probability, right? Okay, the same thing you have to understand here. So now we are in doubt. Now what we have to do is basically we have to take a length which is good for our exit point, by using which we can easily exit from the market, we can easily book our profits. Okay, so the losing of our profit is less and the completion of our trade is actually correct in that way. Okay, so in that case, we are going to choose a shorter length, okay, which is this one, which is B. What we are trying to do, we are trying to increase the probability and decrease the risk. Okay, so that's why we have to take the length B. Okay, so our trade is easily gets completed actually. That's why. So what I have to do is I have to just take this length. I can make a clone of it, of course, and use it and put it right around here at the retracement. See, at the retracement, I'm putting it. Okay. What happened next? In clearly. Now I know when to exit. So, boom. Stop loss less than 5%. Remember, target area is this one. That's a very good trade, of course. And if you remember, I have told you one more thing to risk to reward ratio class. when I discussed about risk management, that 5% is okay, of course. Between less than 5% is good. But sometimes you might have to take a little bit more risk. This is class 2, right? This on the on class 2 we discussed. I don't think so. In class 2 we discussed. In class 1 we discussed, I believe. So this is also class 2. Okay, but if you open your first Jamboard, you will see risk to reward ratio we discussed, and I mentioned that sometimes you might have to risk a little bit more than 5%. Now I told you because this kind of cases. So in this case, you have to. I mean, the concept is to make 50% profit. According to the analysis, you can make 50% profit, right? And if you can make a 50% profit, then you can risk a little bit more. And even if I am risking more, the risk to reward ratio is still more than 5. So it does make sense. Okay. I mean, of course, if you look at it, you can increase the stop loss up to 7.5 or 8%. 8% is the maximum. Until that, the risk to reward ratio does make sense. It is a very rare case. It happens once in a year, once in a 4 year or 5 years, something like that. Okay, but yeah, this is a very rare case to find out. But this is a very good example for a symmetrical triangle. Okay. Now, if you have understood this particular point, then very good. That means you have automatically understood the ascending triangle, descending triangle, that one also. Okay. Now, let me just quickly complete the second point. Now, the opposite of it. Once more, let's say. Now, point A, point B. Okay. Now, can anyone tell me where to enter? At what point we should enter? We have two options, A and B. At what point we should enter? Okay. This is a very simple question. Yeah, absolutely right. At point B, we should enter. Okay. What kind of entering we are taking? Okay. Are we selling at point B or are we buying at point B? Let's make it like that. Are we trying to sell at point B or are we trying to buy at point B? Selling, short position, absolutely correct. Okay, and what we are trying to do at point A? What we are trying to do at point A? Stop loss, absolutely, stop loss. And what we are doing at a stop loss? Are we buying at a stop loss or are we selling at a stop loss? What we are doing at a stop loss? What a stop loss does? Are we buying at a stop loss or are we selling at a stop loss? Yes, absolutely correct. Because in this case, when you are taking a short position, you are selling into the market. And if the market takes a U-turn or it goes opposite of your analysis, then of course you have to buy it somewhere and you have to give it back to the market. Right? So this is basically buy. Right? But yeah, it's very simple. Now, how to identify the exit point? The length, again, put the same length here from the retracement point actually. Okay. And just before the length, you have to exit. A very simple thing. Now, if you have any question, please let me know. Any kind of question, please let me know regarding whatever we have discussed till now, like in any class or any topic. Okay. We do have 5 minutes left. Please, if you have any kind of question, please do drop it in the chat. Anyone, any kind of question, if you have, please let me know. Okay, the market has started moving down now. Whatever progress it had made in the previous 30 minutes, it's vanished. I think the problem is thinking like a trader. See, of course, the one aspect is basically, as I mentioned, like in the which tool do you use to put a stop loss? See, I was using Binance first, and now I'm using Bybit. If you use a Bybit in a derivative markets or in a futures market, it gives you an option to put a stop loss and take profit. Okay, so I will send you a link in the group. No worries. I will send you a link how to put a stop loss, something like that. Okay. I think the problem is thinking like a trader. See, in the first, when I told you about the probability and the risk part, I also mentioned about the emotions part, right? That probability part, someone can teach you. Risk part, anyone can teach you. But how to think as a trader or how to keep thinking as a trader in the market, that is the problem. And that will only come from experience. No one can teach you that part. No one. Okay. And also the trading style someone accepts or someone starts, let's say, if a person is a very patient person, okay, he can control his emotion, then maybe swing trading is good for him. Okay, or he can just sit and do nothing. That's a swing trading kind of trader. But for someone who is very emotional, who wants to make quick money, right, maybe day trading is good for them. But of course, with day trading, it comes with more risk. Okay, as you just saw now, right? I mean, I don't lie about it, but yeah, see, I took the trade, the market went up, I put a very hard stop loss. I mean, see, if I just continue the trade, I might have lose like 30 per, I mean, $200 or $300. But what I did, simply took the trade based on my analysis, put a very tight stop loss. Okay, just a 1% stop loss, let's say. The stop loss triggered, I'm out from the market. Good. Nothing to be worried about. Okay, it's a part of the game. Today I lost $15. Tomorrow I might make 1,500 or 200 or something like that. Okay, but my analysis was correct. I did not make any mistake about my analysis. Okay, the analysis said, okay, there is a bullish thing. The market might move up. The market is moving still up. BTC is moving. I mean, you can clearly see it did move up. Right from here to it, that's a 1.5%. FD did not move. It's okay. It's a part of the game. Okay. It's just that you have to lose. Of course, it's a part of the game, as I said. You can lose money, but lose less. Lose less, gain more. That's it. Okay, you can take 3 trades and you can lose 3 out of 3 of it. Okay, you can lose maybe like say out of 10% or 2%, something like that. But on the 4th trade, if you can make 15%, that's good. Okay, that means you have recovered your money, plus now you're also in profit. But yeah, losing is a part of the game. Just that lose less, win more, keep your things straight, put a tight stop loss. Okay, try to read the market whenever you have free time. Try to understand what the market is trying to do. That's it. That is all about trading. Yeah. Any kind of question, please, guys. We do have 1 minute left. Do you encourage us to use leverage at this stage of beginning? No, I don't use. Don't encourage you to take any kind of leverage. Just that if you want to put a stop loss in any kind of exchange, you do have to use futures account. Okay, futures account does provide you option to take leverage position, right? But if you take one time leverage, like one cross leverage, it basically means you are taking no leverage at all. Okay, so try to make your leverage at one time, one cross, that's it. 1x, one cross, one time, whatever you can say, okay, in your words. Just one time leverage. One time leverage means no leverage at all. Okay, but yeah, in next class, which happens on next Tuesday, I believe, yes, on 6th of February, we will talk about all the remaining topics. I mean, basically remaining pattern trading part. Okay, and we'll see. Yeah, thank you guys. Thank you for coming to the class. Thank you for your time.